We've got the candles on it. The red ones represent prices where the close was below the open, and the green ones represent prices where the close was above the open. And I'm looking at when you open a chart, you can have different time frames on it. Okay, so here I am using a 4-hour time frame, and you can see it right here. It says USD 4-hour time frame. You can choose up to a minute if you want, and you can choose up to a week. But when you're day trading something like the ES that has got very good volatility, I say that, as a beginner, you can perhaps focus on the 4 hours. So you're not doing too many trades, but you're also doing enough trades to give you good returns for the day. And then for the other thing is this: almost every trading platform would have the option for you to add indicators onto it. Here I am using TradingView. TradingView, it's there, it's free. You can sign up and begin to play around with your ideas. You don't have to trade from there. You can have a different brokerage. That's why I choose to use this neutral. Okay, so here I want to add some indicators onto this. Okay, I am going to add the RSI, relative, which they call the relative strength index. Okay, then I am also going to add moving averages. Okay, moving average, I'm going to add two different ones on here. Okay, let me see which ones I use, the 9 and 21. So the 9 period and the 21 period. Okay, so I'm going to change this one to the 21 period moving average. And what moving averages are, they kind of give you price within a certain period of time. So if we say 9 period moving average, we are looking at the last 9 candles based on the 4-hour candle. What was the average price within that period of time, and it is drawn as a line on your screen. Okay, now let me change this to you can change the colors, choose whatever colors that work for you, so that as I keep saying, keep your chart clean and also simple. Don't use too many indicators at any one point in time. Okay, so I choose to use the 9 period and the 21 period EMA, and what I'm doing is I'm using the crossovers. Okay, when the 9 period crosses the 21 period, we can at that point say that price has gone from a bearish area into a bullish price. So there's a trend. We are looking for a trend. We are day traders, and so we are using technical. We want a trend, and we want to get in, and when the trend changes direction, we get out, hopefully making some profit. So when you put this on your chart, I've also loaded here what we call the RSI, relative strength index. Now, for most of these things, I would encourage that you can go to Google, okay, and then when you type RSI, you can type in TradingView wiki, and what that gives you is this: it will bring you here, and you can go to the TradingView Wikipedia page. Gives you the full definition of the indicator that you're using. Okay, it tells you everything, and then gives you the history about it, how it is calculated, and how you are going to use it to make entries and exits in any market. Right, it is a very powerful tool, and it's a very good way to get to understand whatever technical indicator you are using. So in our case here, I just showed you how to find information on RSI and how to apply it, how to take that knowledge and apply it to your chart. So when we come to the RSI, it's an oscillator. And what an oscillator means is that it is something that shows the direction of an asset. So here we are talking about the Euro USD. Now there are levels. It has a range between 10 and 100. Okay, between 10 and 100, and it is generally perceived that if the oscillator is below the 30, the level 30, then the asset has been oversold, and so you should start getting ready for the price to reverse and start heading upwards. And the second perception is that when prices are above the 70, then start looking for opportunities to sell the asset or to short. Okay, so to go long at the bottom, to short at the top. Now, when you look at this chart, for instance, it's very clean, very neat. You don't have to do too much on the 4 hour. So we come here, okay? We see that the RSI. I'm going to use okay, okay. So here, the RSI. What was that? Sorry about that. Okay, here was where the 9 period crossed the 21 period EMA, moving average. Okay. Now before that, we saw also that the RSI was was trading around the 28 RSI, which is below the 30. So it's a very good candidate for look. We start looking for entries. Okay, but you don't want to enter yet because the price is still below the 9 period. And when price is still below the 9 period, what you should be thinking about is shorting. However, you stop shorting at this point because the oscillator is telling you that the volume or the asset has been oversold, and so you just stay put and keep waiting. At this point, the price crossed the MA 9 period crossed the 21 period. Very good opportunity. So now we are looking for an entry point to enter. Well, if you entered here, it was still good because there was a pullback here. You just have to stay in because now the the 9 period has crossed. Like I said, I would have placed a stop here at this point. However, you saw that when it pulled back, it would have taken me out anyway. That is okay. It's better than staying in the trade and letting it going down further, and maybe if it doesn't recover. But here we see that price went down, but when it came back here and opened at this price and started going above the open at this point, you have all the reasons at this point to go long. And why do I say that? Because price went from 30, went above it, pulled back, and then the 9 period is still above the 21. So here's the point where you pull the trigger. If you have decided that you want to go into trading at this point in time, you pull the trigger. You can enter here, and if you look at this between here and all the way to that point, before there was a reversal, because when it went above the 70, we should start thinking about getting out. From
Question, if you don't mind. I'm sorry to interrupt. I might be seeing this wrong, but it seems like these timelines are jumping on. This might just be me. I don't know if this is anyone else. I'm having a mild hard time following these. What you said, divergence, or these trend changes. I don't know if that's just me.
And my response would be, is how do you find a divergence? Where do you find it? Why is he putting these errors? So when you're looking at this chart and you see it's on a full bull trend overall, but you're looking for a short position because at certain points they get to these tops. And if I was controlling these lines, Winfred would know that I can draw lines based off of just eyesight. And I go in and I see. So if I had a line here, I would see from the long term that this trend has been going from here. So I would put a line from this line all the way across right here to where it touched this point and where it reached here. And I want to show you guys. So this is what I do. So see this now. This will give you a good insight of what I see. Once it breaks down from that red and that blue and it breaks past this purple line. So when you're looking at that double top and scroll across the left side, Yep, right there. When you see that double top there, what he's talking about is you see it break past that line right where that arrow is pointing, and it breaks down. Once it breaks that action and it falls down, that's when you know, okay, it's time to get in. Well, now my play would be as I get out at that purple line, and I'm safe. And I know that it fell further, but what I do wait for now is I wait for it to come back through that purple line, and once it comes back through there, that's where I'm willing to get back in for the long side, and I'm going to ride it all the way up because this is a long trending stock. I got lucky shorting it. The whole trend is up, so if you get lucky enough to trend it on the downside, you got to understand that it's only a short-term trend for it to go down. It's not continuing down. So we have to make sure that we have this going from the downside, ripping down past that purple line, which I'd call the elite trading lines, and then you tap my line and come back through. And now imagine I didn't have any of the price action from the right of that red arrow. If you look to the right of that, if you imagine you didn't see any of that, I would have drawn these lines without ever seeing these candles, right? And
Yes.
I would have been ahead of this, and I would have figured out, okay, here's where we get in, here's where we get out. The safe zones is what I like to call them.
That's right. Yeah.
And you don't worry about finding the top. You don't worry about finding the bottom. You find the area between to trade down and up. And I hope that kind of makes it a little more clear.
This is the second kind of thing that I was looking at, just at the bottom, the timeline. So how does this all fit in reference to the timeline when it's on a shorter bit? I believe it's jumping from 02 November and then so on and so forth.
Oh no. Okay. So sorry. Yeah, I'm using the 4 hour. Okay. So okay, I see where your question is. Okay, let me explain it. Okay. Every single candle you see here, it's 4 hours. Okay. So when I put my mouse here, you see the bottom. It says 9th November at 9 o'clock. All right. So when I move to the next one, it says so from 4 hours from 9 a.m. It's 1 p.m. in the afternoon. So this one here is 1 p.m. Sorry.
Why we are fully honest, and I will reframe and just teach everyone. Make sure. So when you're saying that, Fred, make sure they understand on a red candle, it actually started at the top of the candle.
Oh yeah, no, that's no. I'm just saying the whole candle is a 4 hour candle.
Yeah, so
I'm
I
not
want him,
talking about.
but I want
Yeah,
him to
that's
understand that. So the top of that
yeah.
wick represents the beginning of the 4 hour period, and therefore
Hmm.
it drops down to the bottom. So let's just say that it was 1 p.m. in the afternoon, whatever your time frame is, where you are. So let's say it's 1 p.m. The bottom of this red candle here that he was showing you, it represents the bottom of a 4 hour candle. So when a candle's red, the top of the candle is actually the beginning of the hour, and the bottom of the candle is actually the end of the candle, which is the end of the 4 hour
Okay.
period.
Okay. So just let me add to that a bit. Okay. So it opened here. Price went up a bit and then pushed back down. Quick, very quick. That's the wick that was formed up here. But because it opened here and went all the way down, it closed down here. That is the whole 4 hours, 4 hour period. So if I change this to 2 hours, you would see that. So every single candle represents the time period that you have selected. And it could be either green or red. When it's green, it means the price opened down and closed up. When it's red, the price opened up and closed down. George, is that okay? Does that explain it to you? So it's Damon, right?
Yes, sir. No, that definitely does, because what I got from that, this definitely, like, this is something like where I was going with this, or not really going with it, but what I got from that too. This definitely helped me out. So once you start breaking it down into smaller increments, you can start getting more information to make those quicker in the moment judgments. And this is by coming out like this too, you can also see a longer term.
Yes. So I can change this to the 2 hour. When I change it, so now every candle is 2 hours. I can select, let's say, 45 minutes. Now it means that every candle here is 45. And very often when you have a lot of chatting platforms would allow you to have, maybe if we're looking at this here, we can have 4 different windows, right? And then for each of them we can have different time periods for that. I've got other charts here. I don't want us to confuse everyone with that, but let's go back to the single chart. And this is what we are looking.
I do want to mention though that I do like that before he moved that trend line, I wanted to show you. So when it comes to really being a real trader and understanding the market and how it moves and price action and being successful when it comes to this as a long term, this is not the platform you want to trade on. But as a retail trader, this is a perfect platform for you to learn on. And it's going to set you up for the future. So let the naysayers keep saying the nay. Can you see my screen?
Yes.
All right, we're going to pull up. Let's pull up one that I trade a lot. So, okay, so it's not really that bad. So on the 1 minute on this 1 minute plot here, what I look at is these are all levels that I've created over time, and I create these in my own brain, and I start on monthlies, and if you see my screen now, it looks crazy, right? We go to the daily, and then watch how this breaks down over time. This is stuff that I spend a lot of time, just a little bit of time, right, Fred? It's easy when a computer does this for you, but it's hard when you can do it by yourself. Let's just see what I see here. And these are my lines. So imagine you traded every time one of those candles have touched my yellow line, and then your upside profit gain was what you were trying to gain was where the candles that I drew above ended. So if you're here, this is where you sell, this is where you buy. So what you could imagine is you go here, you go, okay, if it comes to this line and it breaks through, I tell you to go short. If it comes through this line, I tell you to go long. So each one of these represents at this point 10 minutes. So 10 minutes is not enough for you to judge a trade, in my professional opinion. And you just use those as points of getting in or out of a trade. But the reason why let me reframe that. You get in a trade because of this chart, the daily. You get in because of the 4-hour chart. You possibly might get in on a 2-hour chart. Maybe a 1-hour chart. And then day traders do the rest. The professionals trade on the rest. The point that I'm trying to make is if you look at it like this, it's a lot easier to find, hey, where should I go? But you have to imagine these are 1 hour. So, okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Count that all the way through your 24-hour period. And you go, okay, it takes 24 hours for the stock to move from this bottom yellow line to this top one. So I want to trade between this range until it tells me otherwise. So what did it do here? It told you otherwise today. It said, you know what? We don't want to break down. We found Kaler's resistance or support that I've had from back here. So it came here, dropped a little bit, found major support here, and then came through. So we follow it all the way up, and then it breaks down, which we don't care about this line right now. That's not what we're talking about. We find it again here. So you found the support here, you found it again here, and you've realized, look at that blue line. See that blue line? That is the, what you call the balls in line, right? That is the
point of control.
Yeah, the Kaler's balls in line equals point of control. So this is the complete point of control on the stock at the moment for a 1-hour chart. And once you find that point of control, you understand that it's time to go long. And what you do is you look at my lines. In my opinion, we put these. If I'm looking at it here, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 lines of support until this last line. And these were all resistance lines on the way down, but they all were previous support levels over here. So I create these lines off of previous support, now resistance, and you play it to the upside and to the downside. And once you create these, now I can play these waves all the way back from when we started calling out Tesla at $300 back here in May.
Okay, it's still technical analysis because you're using, the indicator and you are using lines to determine support and resistance. Okay, because that's all support, resistance, trend lines are the mainstay for technical analysis, right? Because once you find those levels and you know the trend that it is going in, you feel free to pull the trigger when those levels are either breached or met for you. When they breach them, either to the upside or to the downside, you know that you can go in that direction. When it just bounces off it, you know you can follow it. So you're looking at the trend, then you're looking at the support, and you're looking at the resistance. Those three things form the mainstay of price action. And if you can study that over time, Ben gave an advice recently, or was it Mickey? Do this with paper money.
Yes,
Do
yeah.
this
Test
paper
it.
money. Money.
Test your
Test it.
strategies.
Test it. Spend 1 day, 2 days, 3 days, a whole week trying it with paper money, and then you're going to build some stamina or some kind of knowledge, some kind of insight into what you're doing, and you would definitely begin to see rewards when you're using technical analysis versus fundamentals.
And I want to touch too is that there's something that I think that some new traders and even some naysayers will want to say. They go, anybody can draw these lines. They're like, you just put a line at a can. They don't even know that they don't even know to call it a candle. So I don't want to give them that much credit. So the people that are saying, oh, anyone can draw some lines and it's easy. So here's what I want to show you, and I want to give you a test. You draw lines just like I do, and you draw them the way you think the stock's going to go over a period of time, and you set yourself from here all the way down to the 1 minute and create them and see how it works for you. And I'm not telling you that it's going to be wrong. I'm telling you I want to just you to try it yourself and see where they touch. And the idea is look how these candles have touched the line 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20 times in a 5-day period.